This short video today is going to cover a common question that we find at Cloud 360 Accounting, especially from people in small business owners in the startup phase, and that is how should I structure my business, sole trader or limited company? Should I go for one or the other at the beginning, and can it be changed as my business grows and improves? So first of all, let me just outline the differences between a sole trader business and a limited company business. So a sole trader business is essentially a self-employed individual running the business in their own name. And that business, they are the business. So the business can just be their name. So it might be Diane Smith running a photography studio, let's say. Or she might be Diane Smith trading as photographs by Diane or something like that. And when you're starting up as a sole trader, it's a pretty easy process to go through. You essentially go and open up a business bank account in your own name or in the name of the business, the business name that you've chosen. And the next step is really just to get registered with HMRC for self-employment. So that puts you into the self-assessment system. And it also gets you registered for self-employed national insurance contributions. And after that, it's just a matter really of running your business, trying to make some money, keeping your books and records, and working with your accountant through the year. Limited company, there's a wee bit more in it in terms of getting set up. The company has to be formed and incorporated officially with Companies House. So there is a formation process to go through. That will involve selecting the registered office of the company, who are the directors of the company, who's going to own the shares in the company, who are the people of significant control in the company, and what does the company do, drawing up the articles and memorandum, and this is the type of thing we help with at Cloud 360 Accounting. We do help people to form limited companies. After you get your formation documentation through from Companies House or from ourselves, if we've done it for you, you can go to the bank with these documents and open up a limited company bank account and essentially get yourself up and running, start trading, start operating, make some money, deal with your accountant and move forward from there. You'll also then have to make sure the company gets registered for whatever taxes it needs to be registered for, such as corporation tax and so on. So that's the difference between the two at the outset. And the main other areas I want to mention is, first of all, first and foremost, ownership and money. So when you're a self-employed sole trader, you are the business. The bank account is yours, albeit maybe in a business name, but it's still your money. You can have all your business money going in there, pay out all your business costs, and take money for yourself as what's called drawings. And there's no limit on what you can do there in relation to that, but you should always make sure you keep some money aside for your tax and so on. But it's very different if you're a limited company. And this is the one area that I always approach with a client first before going to choose to go to a limited company or to move into a limited company for their business. The money in the company bank account, when you're the director or the shareholder, is not your money. It belongs to the limited company. The limited company is a separate legal entity from yourself. So it's very important to understand that distinction. You can't use the money in the company bank account for personal costs, personal expenditure, and you just can't go and sort of grab money whenever you need it. It has to be done on a much more structured basis. And the thing about a limited company is that because of some of the other benefits of being a limited company, it's important that the money is being looked after in the best interest of the company, in the best interest of the suppliers, in the best interest of the employees, and so on. So it has to be a lot more regimented. A brilliant structure to work with, but that's absolutely key. Make sure you're paying anything personal outside of the company bank account. Okay. Second area I wanted to touch on was liability, and this is one of the big benefits of limited company. So when you're a sole trader and you are the business, if the business gets into difficulties or if the business fails for any particular reason, any debts attaching to the business are attaching to your personal name. So your personal assets are exposed. So, if you have a loan or overdraft from the bank, or you've got a bounce back loan, or you've got anything else like that, then potentially you're going to be liable in your own name if those debts are not fully repaid. That's the beauty about a limited company. It gives limited liability protection to the directors. and to the shareholders. The directors are essentially running the company, the shareholders are the owners of the company, but the company itself and the assets of the company, so whatever money's in the company bank account and whatever equipment maybe the company owns, are the only things at risk should the business fail. And that's a really, really important distinction to make. It's a huge benefit of having a limited company. You're always aiming to make money and pay all your bills, but worst case scenario, limited company gives you a lot more protection. Next thing I want to touch on is image and publicity. So limited companies generally can have a better image from a trading perspective. So when you're looking for lines of credit from suppliers and with banks, and just the image of the company in terms of doing business with customers, generally people get a better vibe when they're dealing with a limited company. It is perceived to be a much more professional and perhaps even a larger business than what it really is, by virtue of the fact that it's a limited company. Whereas working as a sole trader tends to make people think that it's a smaller operation, there's maybe not any staff involved, and there is risks involved in that image being perceived in the eyes of customers and suppliers, for example. Then in relation to publicity, for limited companies, you have to file certain documents every year at Companies House. These are made available for public inspection if needs be, and you can basically log into Companies House and pull a set of accounts for any company you so wish, albeit for small companies it's only a limited amount of information that anybody can see. But that's because there's limited liability protection. There has to be some kind of public exposure in relation to your documents as well. Two other areas I want to touch on, which I can only touch on briefly. First of all, books and accounts. So I believe it's a common misconception that in relation to books and accounts, that it's a lot more rigorous as a limited company than it is as a sole trader. Slightly true in a few aspects, but if you came to me, for example, and you were starting a business now, and we looked and assessed and thought, okay, it's going to look better for you as being a limited company, and based on the way we think your figures are going to go, it's going to be better as a limited company. So if that decision gets made, the fact of the matter is your books and accounts and the requirements for what records you've got to keep are about the same. You know, in terms of the financial records and invoices and receipts and bank statements and all that stuff, there's no difference. When you're running a business, sole trader, limited company, you've got to keep proper books and records. So to me, there's no difference there between the two. However, when you're a limited company, you may have to keep minutes of meetings in relation to dividends and other issues in terms of the running of the company, so there can be a little bit more involved, and there's a little bit more involved with the admin in filing things at Companies House and so on as well. But this is the type of stuff that the likes of ourselves at Cloud 360 Accounting can take care of. Final thing, which I can only touch on briefly because it's very important to note that this particular area has to be looked at specifically on a case-by-case basis, and that is the tax position. So the common, I think, thought out there in the business community is that it is more tax efficient to be a limited company than it is to be a sole trader. And most of the time that is true, but sometimes it can be, the difference between the two can be quite marginal. So unless your profitability is going into the 40, 50k range, there's other issues in relation to, say, PAYE and VAT and so on. The difference between the two can be quite marginal, but each case has to be assessed individually, because your own circumstances and your own growth plans and your own goals and ambitions will determine whether or not it's better to stay sole trader at the start or go straight into a limited company. We dealt with a client recently who, sole trader, it's a one-man band type operation, but given the growth plans that are involved and given the way that the person is deciding to get paid, they've got some savings they can live off and so on. And generally speaking, if you're not going to take all the money and all the profit after tax out of the business, a limited company can be the better option. But as I say, that's something we'd advise people on based on their own unique circumstances. And if that's something you want to speak to me about or any other team, please do give us a shout. As always, we're more than happy to help.